All right, guys, this is Paul Singh, the Market Speculator, with the trade report for February 14th, 2017. Happy Valentine's Day, everybody. Let's take a look at SPY here, continuing to break out all-time highs 3 days in a row. Getting a little extended here. Wouldn't be surprised to see an attempt this morning, and we're up a little bit, and then maybe a pullback. Pullback would be healthy, even down here all the way to 228, which might hurt a little bit if it actually happened, but for the market, it'd be healthy and we'd get some more setups with some of these extended stocks. The rest of the indexes here looking pretty good. IWM not quite as strong. The Q still showing fantastic strength and still leading the market. We took some profits yesterday. We'll go over that in a second. GLD pulling back here, but gapping this morning, which should help our JNUG position. Oil still caught in this range. We're basically up, down, in the middle of this range. So hopefully we break out of here at some point. And obviously that's going to have an impact on energy, but energy is showing a little bit of relative strength. Then we've got the biotechs continuing to run. Remember, we're watching a break of this range, which we're right at right now, or ideally we get a little bit of a pullback and get in at a better price. Semiconductors still leading here, and Russia looking strong, and Brazil also looking very strong. So everything looking good with the indexes. Let's go over a few of our, actually, before we get to the focus list stocks, let's go over our exits yesterday. BA, we entered here around 162 on the pullback, breakout pullback hold, and we hit the bottom of our profit target here. Decided to take profits rather than waiting for that extra about 1.5. I think we got out at 168.60, and we talked about 168 to 170. And then FAS also hitting our target range finally. This is a 2016 entry. Finally hit our target here. Ended up being a winning trade. Now we've got Netflix. It actually did hit the bottom of our target range, 145 to 150. I was going for 147 or 148. Got a little bit of pullback. That's okay. We'll hold and see if it can get back to that level. And Baba also was getting to the bottom of our target range after an entry right in here. Pulled back in by the end of the day, but we're still looking very strong. Volume pattern is still good. So we'll still go for that 104.50 to 105 level. Rest of the positions here, Google starting to move. Entry on the break of the 9, and we're looking for that move to the top of the range. JNUG pulled back in from our entry on Friday, but now is gapping pre-market above our entry, and hopefully we can get that push. UWT, we already went over oil there, middle of the range. Still using TZA as a hedge. Now it is below our stop level, but remember, we've got a bunch of longs here, so I'm using it as a hedge even though it's below our stop level. The idea here is it protects us if the market pulls back, but if it continues to run and our positions do good, this may go down a little bit, but that's okay because we've got so many other positions doing well. So I'm going to keep TZA on for now as that hedge position. And then FCX breakout pullback. Again, we're waiting for the big move up. Now let's go. I'm not going to go over the whole focus list. It's basically the same as yesterday, but some significant moves in FSLR. It got over the 50 days. So we're in remount stage here, which we're watching this level. Almost considered entering yesterday. I wanted to wait till today to see if it holds. Sometimes we get these quick attempts and then they pull back. I want to see if it holds today, but this you could get an alert on FSLR. Now X has been on fire. Missed this one on the remount all the way up to 39. Tough to enter here, but a sympathy play in steel, and all of steel is moving, would be AKS as it's remounted its 9, and we've got this kind of moving average sandwich here. And you know, we could play this for about a point or even play for the break of that level. So keep an eye on AKS. Twilio need a little bit of a pullback, but now has comfortably cleared the moving averages, and we also could watch for a move above 35, which would get it over this high here back in December. UA pulled back below the 9. This is the gap down reversal play. Again, if it gets over the 9, we'll look to enter. Now, Faye did get over the 9 on this weird kind of hammer candle. We'll continue to watch that level closely. And AMZN, Amazon, completed the gap reversal, tested the previous breakout level, and pulled back in. So we're going to watch 840 very closely. You can bet if it gets above 840, I will be in this one. Complete reversal here. Remember a couple of weeks ago when this did gap down, we talked about the gap down reversals and how oftentimes in these strong stocks, these gap downs tend to be overreactions and they reverse. And looks like we're getting that here. We're already in Google and Amazon, pretty much invalidating this gap down, especially if it closes over 840. So watch this one very closely. And remember, guys, just because it's a quote unquote high price stock, we care about the percentage gain. So this is 40 points here. And if we were to enter at 840, our target is going to be 9. So it's almost like an $84 stock going to 90 or an $8.40 stock going to 9. So still significant moves. Pay attention to the percentage gain, not the price of the stock. One more here, GWPH, another one of my favorites, consolidating in this range. If it closes over 130, I will likely be in. All right, guys, that's it for the trade report today. I'll see you guys either later today or early tomorrow.